Hi everyone, welcome back to the podcast. And I have Keshav with me here, and he's found something interesting he saw on YouTube,
Yes,
which he thought will be of great relevance to all of us, including me. So Guru Keshav is going
Sir,
to take us.
including not you, because when I show the notes, you really didn't seem to be more shocked, sir. We're like, I already know this man, like that. So for the viewers, I think it will be new for them, sir.
Mhm.
So now I came up with a investment flow chart, sir. How the market run. The flow chart consists of optimism, excitement, thrill, euphoria, anxiety, denial, fear, desperation, panic, despondency, depression, hope, relief, then back to optimism, sir. These are the things the contains in a
This
market flow
is
chart.
like a thesaurus. You know what a thesaurus is, right?
Thesaurus. I heard it in 12th standard, I think so, sir.
Thesaurus is a book where you can go ask for a word, and it'll give you words which are synonyms. You know what synonyms are?
Synonyms.
Yeah, synonyms is like synonymous. It is words which are similar to that word. So if you say optimism, synonym for optimism is excitement, thrill, euphoria, are all synonyms. Words which are similar to it.
Okay, sir.
So the first four words can be summed up with one word, optimism. Second lot, anxiety. Synonyms for anxiety is denial, fear, and depression and panic.
Okay, sir.
Okay, those are all tied together.
Okay, sir.
Then capitulation is the next set of words.
Despondency, depression.
And last is hope and relief is one word.
That's why I said,
So
sir.
instead of so many
You
words,
already know, but they will not know.
so instead of having so many words, you can just say you first have optimism.
Okay, sir.
Okay, from optimism, people get very happy and
yes,
excited with optimism, and they
Yes,
get
sir.
carried away and go to euphoria.
Yes, sir.
In euphoria, suddenly somewhere along the line, they'll be like, "Oh my god!" It's like driving a car or a motorcycle. When you first get in the motorcycle, you feel very nice. You can't wait for the thrill of it going fast.
Yes, sir.
Then you're accelerating on the empty road. Nobody's on the road. And you're going 90, 80, from 90 to 100, and you're feeling great. You're feeling more confident. Suddenly hitting 120, the bike starts shaking a little. Now you're getting scared.
Yes, sir.
That euphoria is going away. Now you're getting scared. If some small stone comes, someone suddenly moves, and the bike's handlebar shifts, you're going to skid. So the euphoria suddenly starts turning to anxiety. Then you want to brake. You're
Yes, sir.
scared to brake because you do not know if you brake too fast, too hard, what will happen. So you want to slowly brake. You want to take your hand off the accelerator. Desperation and all this will start kicking in.
Yes, sir. So when we use these items in share market, sir, now the market is going on a excitement state, sir. That is related to optimism. Optimism state, sir.
So
Now we
you're
are in
saying we're in
optimism,
the
sir.
beginning of the run.
Yes, sir. Beginning of the run.
The wave is going to go up.
Yes, sir. Now we have to be more conscious, sir, because there is a bull run. People are more interested to invest nowadays because the market is showing day by day higher, getting higher only. So the people are more excited to invest in the market. So what they are thinking is they can get a good return. But what am I saying is, if you invest now in a bull run, you can get a good return. But that doesn't mean you're having a good profit to the money you have invested, sir. Because you want to have a better profit, you don't need to invest in this situation, sir. We have to invest in the situation which anxiety comes, sir. Anxiety situations. That is what means now Indian market is in a bull run because after that election is going to come. The more predicted results is BJP is going to win. That means the market is anyways is going to continue in a bull run. Then there is a news that Fed is going to cut down the interest rate. So that is also good news to the market because the market is getting another reason to go up, sir. So these are the two reasons which the market is going to spike in these upcoming months. So if we check down the PE of the market before Corona, it is around 40 to 45, sir. I think so. Now it is around 23 to 24. Now the market in 4 years, it grown to around 22,000, sir, now. Before that, it is around, I think so, 17 or 18,000, sir. I think so, sir. It is gone to 22,000, sir. Now in the upcoming months, it will reach to 25, sir. Then we don't want to invest now, sir. What my thought is, we wait for another 6 months to invest in the stocks, sir. Because after that, anyways, the correction is going to happen, sir. We can't say that correction will happen now or then, but correction will definitely happen. So
you really read that book, Learn to Earn? I wonder sometimes, man.
So, no, sir. According to this research, sir.
That's not research, this is noise, sir.
Sir, but Learn
This
to
is
Earn...
like trying to predict the weather.
Okay, sir. We can't time the market.
You can't time the market.
Yes,
and
sir.
you do not know on what grounds are you saying we're in optimism. We could be in euphoria already. Or maybe we are going through relief. We've just come out of depression, thinking Modi ji is not going to win. And now there's hope that Modi ji is going to win, and now we're getting into the relief. How do you know where we are? On what are you basing this on?
Sir, I thought euphoria means the market is going high by high. So we are in excitement state because most of us are ready to invest now. So I thought
people are always ready to invest.
Euphoria.
In any market you go, ask someone that's ready to invest.
Okay, sir. Understood, sir.
No. I'm not trying to put it down.
Okay.
All I'm saying is, this is all great. This is just noise.
Okay, sir.
We know we cannot time the market.
Correct, sir.
We do not know really where we are in that graph.
Correct, sir.
Right? And like you said, if you invest now and you try to sell it at the peak and exit the market, you do not know where the peak is. You do not know how fast from thrill it will go to euphoria.
Correct,
and
sir.
how fast it'll go from euphoria to anxiety. So if you're bought now, let's say in optimism, and you see a 15% gain in your holdings before the elections, right? And there's no certainty of elections. Lots of times, you saw how Trump won. Everyone said Hillary will win, and Trump came to power. So you can't predict elections. Even elections, though the polling says like this, on the day of elections, actually the last 1 week of the election is when the election will be decided. Most people decide a week, 4 or 5 days before the election, they decide whom they're going to vote for. As much as we think people decide months ahead, nobody does. Right? So when you think about all that, it's very difficult to time.
Yes, sir.
And when to exit. And like you rightly said, you might put money in now, you'll see 15% gain. Then you're thinking, okay, maybe there's still another 2-3% before it should sell. Then the market suddenly decides to go to anxiety. That from 15%, you can go down to 0 to -% and reach -20% and sit there. And how fast it goes from hope, relief, from depression. Market can sit in depression. Albin you did a video about it. We spoke that sometimes it can be depressed for a very long time.
Correct, sir. Correct, sir.
So it's switching to hope and relief might take time. So if you try to do all this, you will only burn yourself. And we did speak in great length that it's better to keep systematically investing, betting on the Indian people in the economy. If you're doing mutual funds, passive index, and forget about it. And as far as this is all concerned, it's just noise and rubbish. People are just feeding something for clickbaiting you and watching programs on TV and YouTube or whatever. You are picking companies which you are looking at the business model.
Correct, sir.
So you should study that company's business model and see, is it recession proof? Is it, interest rate proof? What kind of a business is it? Is it dependent on interest rates? Like PG Invit. That business is dependent on interest rate. Interest rates goes up and down, the share price moves up and down.
Correct, sir.
And we've explained why it moves up and down. So are you in that kind of a business? Are you a gold business like Manappuram? Does gold prices affect your business? So based on that analysis, and if that price is correct, you buy those companies and you forget about it. This is all very nice, like sitting and talking about the weather.
Correct, sir.
And say, "Day, will it rain today?"
Sir, I got so interested because I researched about these two things. So I saw
the effects of election and interest rate.
In Jan 31, there is a speculation that US is going to cut down the interest rate.
That also you can't predict, Keshav, because let's say something happens. Let's say the Israeli war, which is going on, turns into a wider conflict. What are you going to do then? You do not know what Iran will decide to do. You do not know.
Correct,
anything can happen. So, intellectually speaking, it's very interesting. Logically speaking, yes. If the BJP comes back in full majority and the interest rates are cut, yes, it will go up. If there's a hung parliament in India, there's uncertainty in India, it will affect the stock market. And if Fed suddenly takes a U-turn and decides not to come, it will take... Yeah, but as an investor, yes, it's just noise.
Yes, sir. As you already said, as an investor, we have to invest in all the climates.
Correct.
We don't have to see what the climate is.
But I'm glad that you're doing this kind of research. 6 months back, 9 months back, this is something we have not even done.
Yes, sir. True, sir.
You will be just forwarding me some money control
link,
article. And you'll say, "Sir, we'll talk about this." And Vic, have you read it? You'll be like, "No, sir, you talk. I will just sit there." For a change, you have done research, which I'm so proud of you. And you, for the first 5 minutes of the video, you've spoken in great length about what you've understood. And what all you've said is absolutely right. There's not one thing which you've said wrong other than when to invest. You should always be invested.
Yes, sir.
Your investment should be based on your goals and your timelines. And if the opportunity to invest is correct for you. This is all intellectual conversation. And of course, it's great conversation. When a subject is new for you like this, it is very exciting to talk about it.
Yes, sir.
It's like when you learn a new thing in mathematics or in physics, you immediately want to talk to your friends about it because you've understood it.
Yes, sir.
And you feel very nice to talk about it. And I get that. And it's lovely that you've understood it. And what all you've said is absolutely right. Election, interest rate, the high PE, the position the market is in. I agree with everything you said. It's all spot on.
Thank you, sir.
So that I give you 100 marks.
Thank you.
But as far as investing concerned, please don't stop investing.
Okay, sir. Understood, sir. I understood that, sir.
Investment should be based on this.
Okay, sir.
Okay?
Understood, sir.
You cannot keep waiting for the blood in the street. We're not Warren Buffett. We're not having $100 billion sitting in the bank account, waiting for blood on the street. We're sitting with chillers. Tea-coffee money. So we should keep investing and not worry about it.
Yes, sir. Okay.
But good work, man.
Thank you, sir.
Guys, I hope you enjoyed the podcast and I hope you understood where Keshav was coming from as far as the market cycles are concerned. And like Keshav and me agree on, we should always be invested regardless of market cycles. We're talking about the long term here. In the long term, all of this noise doesn't matter. Thanks for watching the podcast and I'll see you in the next one soon. Bye.
Thank you.